We're back in the Gunners Club.
And you're back with us as well. There'd you be. Now we're just sitting back having a bit of a beer. I've just come back the other day from Perth, saw the other side of Australia, had a great time. And I thought it'd be good just to have a bit of a chat over a beer about the economy in Australia and also, I guess, by inference, the rest of the world as well.
I'll have a drink to that.
So look, what's going on in the world at the moment is I guess we're all sort of holding our breaths. There's been a whole state of elections. We've had a recent election in India, the biggest democracy on earth, and we're looking forward to November, close to the end of the year, for the election in the United States. And we're sort of holding our breath for that.
And France just finished having one.
Ah, yeah.
And
it's an epidemic of elections.
Yes, and Le Pen rocked it in.
Make of that what you will. Australia's a little bit unique in that we tend to go through the recessions a little bit easier generally than what the rest of the world does, but we're in a very unique position at the moment. Now, our Reserve Bank really only has one trigger, and that's whether they increase the interest rates.
That's right.
Or they lower the interest rates. I guess you could say if they don't do either, that's a third option as well. But we've had a run of 13 increases in interest rates. That brings our cash rate up to 4.35%. Now, for people in this generation, that leaves us with quite a high interest rate. If you go back to when I was a lad at school and we had interest rates up to about 16-17%,
yes,
that's when interest rates really were very high indeed.
Exactly. But it's comparative to income.
Well, it's not comparative to the rest of the world. So, for example, Canada has recently just reduced their interest rates, but their cash rate is a lot higher than what Australia's is at the moment. Now, if you think about what's going to happen this month when the RBA meets, the consensus is there's probably a 5% chance of them lowering the interest rate. So, it's not much of a chance, really.
Well, yeah, the bookies are going to make some money.
I'm sure they will. But they're really looking for a drop in interest rates. They're considering, this is what the market believes, in, say, the third quarter of 2025. Now, at the moment, our unemployment rate is actually quite low. We were taught about this concept in economics in school of natural unemployment, where because you'd have people transitioning from one job to another, there would always be a pool of people out of work, even if the market was perfect. And we considered a natural unemployment rate to be around 6%. Well, our unemployment rate recently, post-COVID, has been around 4%. That's abnormally low. That's really quite low. Put in the perspective, for every job that's available on the market at the moment in Australia, there's about 1.6 people who are unemployed. That's not a lot of fat. Now, there's really two different Australias. There's the Eastern Seaboard, and then there's West Australia.
Correct.
West Australia is very different because it's really a mining-driven, export-driven market. Now, they account for about half of Australia's exports. So things like the iron, the lithium, the natural gas, that sort of thing. Very resource-rich. For West Australia, for every job that's available, there's only 1.2 people available to take that job. That is very slim pickings. So what to do if you're the government and you're making economic decisions for Australia? You've effectively got two Australias. You've got the West and you've got the Eastern Seaboard. Now, when I say about two different markets, if you have a think about the people who suffered the most during COVID, because there's really the pre-COVID and the post-COVID economies as to explaining what's happened in Australia. People who've done the best are the people probably selfishly like me who've got intellectual skills that they could sell during that period.
Yep.
Information workers, that sort of people, accountants, lawyers, that sort of people. And then there were the younger generation who, let's say, if they weren't employed in those industries, basically were isolated and unable to engage and to earn an income.
Yeah, specifically in the hospitality industry and things that were not considered, what were they called?
Emergency services.
Emergency services, that's right.
Exactly right. So for people like me, we've come out of COVID with greater savings than what we had before. So actually in a better financial situation. For some of the younger generation, there's been basically a pause on the most important part of their lives. A pause in a period where there would have been a skill transfer to them. They would have learnt new things. They would have learnt to know other people who could have helped them in their career. And they would have been able to put some money aside. Now, they've come out into this market where everything has gone up in price. Now in Australia, I'll give you an idea. Post-COVID, petrol has gone up by 30%. That is a lot.
That's a huge amount.
Food, which I consider to be an essential, I don't know about you, has gone up in general by 20%. Meat has gone up in price by 20%. These are huge increases. Now, this is in a market where the labour productivity has only gone up in the last quarter by about 1.1%. The government thought that it would go up by more than that, but in fact it hasn't. It's disappointed the government on that regard. So we're seeing two different sorts of Australia, if you can see what I mean, the young and the older. And it's the older people who are doing the better because they have money set aside. That money's now earning a far higher interest rate than what it was before. To them it represents income. To the younger people who are having to pay off a mortgage, the mortgage suddenly can become very, very expensive indeed.
Yeah, but I mean, it's not even necessarily so much the mortgage, but, well, I mean, the mortgage is associated with it, but the price of real estate has just gone stupid.
It has gone stupid, and in some states more than others. So I would argue, particularly, it's gone stupid in Queensland, in Adelaide, and in Perth. So I've mentioned the capital cities instead of the states. It's gone particularly stupid there. Melbourne hasn't felt the same impact as much as what those other cities have, interestingly.
Well, it's always been Sydney that's been the market leader in reality, wasn't it?
Yeah,
now all of a
and
sudden-
still it is, but certainly not in terms of the growth.
Yeah.
In terms of the growth, it would be the Brisbane, Adelaide, and Perth. Yes, very interesting times that we're living in. One of the major problems is this: rental has gone up, and rental is a key component of the CPI. So the way the government in Australia is always measured inflation is to say, let's have a typical basket of goods and services, and in part of that is rental. Now, 2022 to 2023, the government let in 528,000 net immigrants into Australia. Now, none of these people paid a tax for infrastructure, for sewers, for roads, for ports, for airports, etc., so that there was provision there on their arrival that the cities were ready to take them in. That certainly didn't happen. The other thing that didn't happen was that there was not planning for the housing for these people. And people come in, they chase the economic dream, so they always choose to live in a metropolitan area where they think they can be close to family and also gain as much as much income as they can.
Well, and that obviously means that all the available rental market gets swallowed up, leaving less available properties for rent,
Yes.
thereby driving up the price.
Drives up the price. That's exactly what happens, but it probably wouldn't be so much the problem if there was actually planning for the accommodation of these people. Now, currently, Australia-wide, the approvals for new builds are as low as they've been since 2012. That is a major problem. The other problem that really dovetails onto that is the dwellings which have been approved are not the dwellings that will result in a natural population growth and building up of the community for Australia. Because if you're investing in building a property, you would earn more per bedroom by renting out a 2-bedroom than a 3-bedroom. That's
Yes.
simply the way that it goes.
Yes.
And if you do in fact manage to score a new 3-bedroom in a city, or mid-city, you're going to find that that 3rd bedroom is not actually going to be big enough to hold clothes and to hold an adult or a teenager. It's simply something that's dressed to look like it might be a functional 3rd bedroom.
Yes.
So we're letting too many people in who are not paying an infrastructure tax. We're not approving the dwellings to be built. The dwellings which are being built are effectively not practical for the families that are supposed to live there and to build this nation. It's a fundamental problem. And really, for me, it goes back to the fact that our politicians really are only looking forward to the next election.
Oh, always. Always. Yeah, to them, it's a 4-year cycle or 5-year cycle, whatever it happens to be, whether it's state or federal, whatever. But like you said, it is just that election cycle that drives their decision-making, not the future of the country.
Yeah, I just don't see the forward planning at all. And Australia, as I've described, it's so different. We've got different generations which are feeling the economic pinch completely differently. Now, what's happening at the moment is that people from 55 plus who are free of mortgage are starting to spend an awful lot more. So if you have a look how they're spending money, the holidays has gone up, the visits to restaurants have gone up, and the consumer spending on retail and lovely clothes, etc., has gone up. For the people who are younger and have taken on the mortgages, they're really cutting the expenses any way they can. So food's gone up by 20%. food is a non-negotiable. You have to eat, but you can choose between sausages and steak, let's say.
Yeah.
The other thing you can do is to look at cutting down things which you consider as non-essential. They might in fact turn out to be very essential, and people are cutting down insurances, for
yes.
example.
Yep.
I know that's something I've done. I've reconsidered my insurances, for cars. Do we need third party? Do we need comprehensive? Different ways of shaking the dice and trying to throw a 5 or a 6, to get a win.
Well, yeah. I mean, it's like playing roulette, though, isn't it?
What the house always wins.
Yeah, well, yeah. I mean, it's like playing roulette. I won't pay the insurance because I can save some money, and then the very next week you're in a bingo.
Now, the thing that people across the board are spending more money on in Australia is that little bit of entertainment. So people are spending more on sporting events. They're paying more to go and see concerts, and they're spending more on cheap holidays to Asia. So things like your trips to Bali, those are things that people are spending more money on. I wonder how the economic situation finds you. Give us some ideas as to what you think's happening with the state of the economy in Australia, or wherever it is that you are in.
I'm at a loss here.
Yeah. If you like what we do, join us for more adventures. We've got plenty more.
And don't forget to like and subscribe. We like that.
We'll see you soon.